I'm gonna start the stream in about 5 minutes. I'll start going in details. I'm just gonna set up my charts, just getting a better read of what's going on. Could be forming a fake bull flag here, or we could potentially start making our way up. Currently bullish on dollar. I like what it's doing here right now, respecting this order block, fair value gap, and I'd like to see it move up to claim this bearish order block before we see what it does next. So this is a weekly time frame. I'm looking at the weekly view here. I've made the stream on ultra low latency to get the best feedback possible, because the last few streams I've noticed it was a lot of lag, which could have put a lot of people off. But yeah, so currently bullish on dollar, but the fact that I'm bullish on dollar means to me that I need to be very, very careful with my bullish view on Nasdaq. Although just the way things are playing out right now, it does look like Nasdaq could potentially run for that daily one standard deviation. Let me just maximize the screen so you can see that better. So I'm liking this one standard deviation, which would mean that we'd get a measured move. So this small pullback on the daily time frame. So I've measured the open of the initial pullback candle to the close of the second day of the pullback. And one standard deviation of that move to the upside would be 18158. So that's just the idea so far. So this is all well and good. I mean, and this analysis is all well and good, but it will mean nothing at 9:30 because time is the most important factor. So that initial volatility at 9:30, that's what I'm looking for to give me more information, because I cannot trust this right now before 9:30 because it's Monday. If it was Tuesday, Wednesday, then I'll be able to get a view already because we've already had that Monday price action. So I've got enough info to be able to analyze and predict what's going to happen in the future and the rest of the week. But because it's Monday, we don't know what this week has in store, although I have my, you know, initial idea, which I stated on Telegram, that I'm looking for that one standard deviation on the daily. But I'm in no rush to bite on anything just yet. Right. So I hope the sound is good. Should be good. My computer's telling me that it's good. Justin, what's going on, my guy? So yeah, it's 50-50. I was speaking to Justin before I started the stream, and it's it's clear that it's just 50-50 right now. We've got about 18 minutes to the New York Open, but I just thought I'd start the stream a bit early. So you can see here this 15-minute fair value gap, sorry, this 1 hour fair value gap along with this 1 hour wick. we saw price respect the consequent encroachment of this wick. This is an algorithmic support level. So the fact that price didn't close below the 50% of this wick and then carried on going up shows that this level is an area of support right now, right? So the fact that it's a level of support, I'm not looking to take any shorts unless we break that level and show that it's closing below the 50%. Because, like I said, this is algorithmic support. Right now, we're just trading within this 1 hour BISI, this most recent fair value gap, and then we've got a bigger fair value gap from last Friday. So that's what's going on right now. So nothing major right now. So if we were to want to do anything, we can discuss market psychology. So on Mondays, what's the characteristics of Monday? So Monday generally sees a manipulation phase before the actual move during the week. So if we are bullish for the week and we expect the weekly candle to close bullish, then on Monday we can expect a manipulation phase, which is in the opposite direction of our weekly bias. So it could move down. Why does it move down? In order to induce retail or dumb money into thinking that we're going short, and this is the reversal part now. This is where the market's going to reverse and they're going to try and call the top, when really price is just offering smart money a discount to go long. So if we're looking at price action right now, we can see that we're in a deep premium. So the fact that we're in a deep premium means smart money would want a discount price in order to go long. Is the price offering any sort of discount right now? No. Why would they look for a discount? Because they're looking to pair their orders with a counterparty. What is that counterparty consist of? Opposite orders on the other side of the market. So if they're looking to take longs and they're looking to go long with huge volume, billions and billions of dollars, they need a counterparty, because it's not like how we trade, how the institutions trade, because they trade with such large volume, they need to have those orders paired with opposite orders. We're basically like grains of sand in the grand scheme of things in this marketplace, right? So where are the orders right now? Where are the stops right now? Where we can see below the midnight, it's looking very vulnerable. Early longs from midnight are gonna get looked to get wiped out, right? So it's very simple. How far can it go? Well, it could want to revisit and rebalance this BISI on the 1 hour. But if we look at the 30-minute for a more recent target, we have this bullish order block on the 30-minute, which is at 17993. Now I mentioned 17993 in the Telegram to note that, because if you're looking for a nice and easy target to the downside, that's one to look out for. Because price would usually react off that and create some sort of retracement before potentially going further down. So that would be very nice and very easy if you're not one to want to give the profits back that you've made and give it back into a retracement and wait through a retracement, which could take a few hours or whatever. So that's what I've got in mind right now. Hold on, I'm just looking at this inversion fair value gap. I'd want to see that breached. So this is a 1 hour fair value gap, BISI, buy side imbalance, sell side inefficiency. This is a SIBI, which is a sell side imbalance, buy side inefficiency. So we saw price tear through that SIBI, and now price is testing the SIBI. In order for price to breach it and take out those sell stops below the midnight open, it would have to just bypass this level of support and this level of support. So right now, of course, the majority of traders are dying for a trade. They want to start making money, but they're forgetting a very, very key aspect of trading, which is trading is not that your profitability is not determined by the amount of time that you spend or the amount of stress that you put on yourself. The whole idea of trading is efficient profits. What do I mean by efficient profits? It's not related to the amount of effort that you put in actively trading. The majority of trading consists of planning, waiting, and being able to make that quick decision at the right time, capitalize, and get out. And once you get out, should you be fortunate enough to make a profit with that plan that you applied, not giving that money back. So why would you give the money back? Why would you even want to give the money back? Well, you'll give the money back unwillingly because you want to make more profits. And that's where greed comes in. So greed will force you into thinking that you saw another opportunity immediately and you want to make more money. So that's going to force you to take a trade which you didn't plan well enough, which doesn't fit your trading model. And then you're going to take that trade and you're going to give the majority of those profits back, if not more, if you over leverage. So that's the greed side. The fear side is that you fear that that profitable trade that you just made, the market will not give you another model like the one that you profited off either tomorrow or the day after. So that's the fear aspect, which comes with lack of confidence in your plan, in your ability to read the market. How do you bypass that? How do you create confidence in the market? By applying discipline, getting experience, having the strength to just read price without the need to trade with your live funds. If you want to trade to test that edge, use a demo, because should you have taken a live trade, which I don't suggest that you should, I'm not a financial advisor, so I can't give you that sort of suggestion. But let's say that you did, outside of my knowing that you did, then you'd move over to demo to protect your profits. So we've got about 9 minutes left to market open. Like I said, I've done it like ultra low late. I've tried to make the stream on ultra low latency. I'm still getting used to the settings and stuff for the stream. So, but it should be a lot faster than last week, because last week I had it on normal latency, and just watching back those streams, I could tell that it was very, very slow compared to the live market. So this should be a lot better and allow you to engage with my stream a lot more efficiently. So still testing this area here. Let me get rid of this. Currently looking at the 30-minute time frame. Let's go to the 15-minute time frame. That's what I like to look at most. So what do we have here? Price coming down. It's breached mean threshold of this. So I've seen that immediately, as you can see. Let me get rid of this. I don't want to confuse anyone. Midpoint measurement. Okay. Just maximize this. Get rid of these. Right, so you can see price breaching mean threshold. Breaching mean threshold of this order block. which means that price is likely to want to continue going lower and take out that midnight open price and the stops below it, which I was discussing with my good friend Justin on WhatsApp. Um, what's going to happen after that? I said that on the 30-minute we've got a level, which is also visual on the 15-minute. So it could come down as far as 17993, which would be this level here, and then see how price reacts off it. But in terms of the initial volatility, sometimes I like to trade the 930 open if it's very, very clear. If price has already taken stops on an opposite direction and I have a strong bias in place and I know where the liquidity is and where it's going to go, I'll take a trade like 2, 3 minutes or maybe even 5 minutes before New York Open and ride that nice volatility in my favor. But in terms of the way it's looking right now, I am not willing to take the risk of trading that 930 open because it's forming what retail would see as a bull flag, and that to me tells me that it's gonna fail because the majority have to be on the wrong side of the market. So that is gonna fail um, from my perspective. So I do my best to view the market from the view of smart money. It takes a very, very long time to be able to do that and a lot of experience and a lot of chart time because we're not initially trained to look at it from the visual or the perspective of smart money because we're trained to be the dumb money. Um, not going to go deep into the rabbit hole on live stream because YouTube might not like what I have to say. So that's just a little rant. Got 5 minutes till the New York Open. Justin, if you're in this stream, let me know what you've got in mind. It'll be good to see what you have in mind. Trade ideas while we're waiting. If you're busy and you're just watching the stream, then just do your thing, my bro. Appreciate you tuning in. Looking for buyers after Asian low is taken right by the 50% mark of Asian, so let's see how it reacts. Yep, makes sense. Context behind it, logical levels, and the narrative of we're expecting prices to go higher in the main. Eighteen zero zero three on the 15-minute. Yeah, I see that. Yeah, I see that. Everything can change in the next 3 minutes. That's why I want to wait for that initial volatility surge. at New York Open because that'll shake things up. So one thing that I aim to do as much as possible every single trading day is the idea of cornering time. So what does it mean when I say cornering time? Cornering time in the fact that I want to time when those nice and easy price runs are going to take place in order for me to take a position which is low risk, maximizing the amount of profits that I could potentially make while minimizing drawdown and enabling me to take the biggest lot size with the lowest risk, essentially. That gives me the ability to have a tight stop loss and just enjoy a nice and easy price run. I'm not really too fussed about catching huge moves as long as I have a method which pays me every single day consistently. You could spend hours and hours in a huge move and it could pay out, but then the next day you're going to try and do the same thing and you're going to give the money back. So what's the point? You have just wasted so much of your time. That's just my experience. It's like the idea of high frequency trading algorithms. They're not looking for big washout moves or home runs. They're just taking bits and bits from here, bits from there consistently. And at the end of the day, if you're looking to do this on a bigger scale, no one really cares how many points you can get. No one really cares how many points you can catch. The only thing anyone cares about if they're looking to invest in you or put money in with you, let's say if you have a fund or whatever, what they care about is how much you're going to make them and how consistent you are and how much risk they're exposed to. No one cares if you can catch 200 points, 100 points, 500 points, 1000. They don't care. Honestly, they don't care. It doesn't even cross their mind. Fact of the matter is, how much would I make on a monthly basis, on a weekly basis, and so on and so forth. So that's why I look to catch those nice and easy runs. And I'm not trading for ego, I'm trading for capital. Okay, here we go. New York Open. Ding, ding, ding. Let's get rid of this. And there we go. Stops below the midnight open. Here we come. Spoke to Justin about that. He agreed that that's where we were likely to go. And that's where we're going right now. Always fun to see the market go in your favor. No matter how many times we do this, no matter how many times we see it going in our favor and doing exactly what we think it's going to do, it's still as if it's the first time we see it every single time. That's how much, that's how exciting it is. That's how enjoyable it is to see it go in your favor because it's very rare that people can call these markets the way that me and Justin and other people can do. So there we go. Heading for those Asian lows right now, as you can see, Justin called that 18003. Sell side right here. I bet you're loving that, Justin, right now. So we're reading the tape. We haven't taken any trades, but we're reading the tape. And what does reading with the tape, how does that benefit you? It shows you, and it's a little like it basically tells you that you can read price. It tells you that you can see the market with a certain level of clarity, which is very rare amongst most traders. And the fact that you can read price means you're going to be able to read it again and again and again and again. But it's not just about reading it again and again. It's about timing the right moves, the quick moves, which will give you quick profits. Yes, I said quick profits. But Rami, there's no such thing as making money quickly in these markets. No, you can get to a level of proficiency where you can make money quick in these markets, but it doesn't mean, you know, pushing your edge too far. Get in and get out. Take what you can and get out, and don't push it. Because you can do this consistently. If you can read price like this, then you can read it again tomorrow and the day after, and you catch the drift. Never be in a rush, no matter what you're going through in your personal life, financial wise. The market doesn't care, so you need to just follow your plan and just have confidence in the long term. Just have confidence that it's going to get you where you need to be eventually. So we got a reaction off this sell side here. I'm just going to label that right there. Just go down to a 5-minute time frame. Buy side right here, very, very smooth highs, nice and juicy. You might want to play ping pong right now and go from sell side to buy side. So I've got that in my crosshairs of what price might be looking to do. So very, very rapidly repricing to buy side right now. Rapidly. And I'm absolutely fine with not taking these trades. I'm absolutely fine with not being in the market right now. Why? Because I want a nice and easy move, which is clear, it's got visibility, and I know there's institutional sponsorship. This right now is just clearing the table from the impatient. Like, as soon as the market opened, we saw downside movement. How many people got short here and how many people just got ripped apart? Reaction off the top. Yep, so the reaction off the top could take place here. See if it could provide a fair value gap here. But price currently looks like it's in a hurry. Short-term buy side taken. Bullish breaker. Friday highs are here. I'm just going to label that as previous daily high just so we can keep that in mind. Because that is an important level. So PDH stands for previous daily high, 1860 to 68. See what's up just above that. Yeah, previous daily high. Yep. Inversion, fair value gap, bullish breaker. Let's see if it respects it and wants to carry on going higher. So I'm opting to stay out for the first 15 minutes of this opening range. Let's have a look at what dollar index is doing. Currently, dollar index stagnant. Moving at the beat of its own drum right now. It's not showing as much activity. So far, price is taking this short-term buy side, making its way back down. Got my eye on this level and this level. I'm in no rush to want to do anything right now. ES also taking out its midnight open, taking out short term buy side, and it's looking quite bullish at the moment. Let's have a look at the 1 hour here. Okay. Remember this BISI. Body's still respecting that BISI. So I'm not really liking to take any trades right now. Why? Because it's Monday. This is still the opening range. We've taken short-term buy side. Yes, there's more buy side liquidity up here and here, but it can easily retrace deeper and retest these levels. I mentioned that on Monday I like to look for low-hanging fruit and get out. Yeah, literally. It's literally just ping pong. Uh, see if it can reach for here. See the fact that it's just formed a lot of short-term highs. I wouldn't be surprised if price just takes out a short-term high, reacts off it, comes back down deeper, and then takes out another short-term high, and then takes out this high, comes back down, and then eventually works its way up to that high. Ten minutes in. 10 minutos. 9:30. I'm gonna label this inversion fair value gap because this is the 9:30 open rundown. So this inversion fair value gap is significant to me. Either price will go to it now and potentially react off it to the upside, or it might just carry on going up and eventually refer back to that level later on in the day. So let's have a look and see. So price currently acting as a magnet to these levels. So look at the 5 minute. Yeah, okay. So price has done that. Taking that inversion fair value gap. $18,003 potential. All right, so Justin is saying 18003. We got that labeled already. So let's see if it wants it now or later. It's either going to want it now or it's going to want it at 10 a.m. So let's see. See that reaction alone? Look, from here to here, almost 10 handles. So that would have been a nice and easy trade. Hope you can actually appreciate the level of precision that these analysis concepts deliver. I know I do. So that would have been an easy 10 handles to the upside. Nice low hanging fruit and be done. Five-minute. So we're taking sell side, sell side, sell side, and one buy side. These highs are very, very smooth, so it could want to revisit them. Five-minute, respecting these order blocks. Working its way back down now. Yeah, looks a lot like that right now. Waiting for 10 a.m. Give me a clearer view. Right, so it's working its way down now. Seeing if it respects this level, wants to go lower, or if it goes higher. Very choppy right now. Very, very choppy. DXY moving lower. Okay, I'm gonna take a buy here. I'm gonna put my stop just below here. TP just above these highs. So I'm gonna take a partial just above these highs if it gives it to me. I'm currently trading in a very tight range, so I'm gonna have to be nimble. Yeah, see if he wants those highs. I want that high. I'd like to see it take that high before I close two contracts. Should just remain impatient, just gonna see if it pans out or if I have to scratch the trade, I will. Hmm. I'm gonna close that. I don't like what it's doing now. I'd need to see it breach this because right now it's not very clear. I don't want to risk it. Nothing wrong with closing the trade early if it's not giving you what you want to see. I'm not trying to look like a magician, I'm trying to be profitable. See, the only thing which is telling me we could potentially carry on going up for a little bit is the fact that we took this sell side and reacted, the short-term sell side. 15-minute currently trading within this 15-minute fair value gap. I'm going to label this. This would act as a level of resistance. Let's see how the 15-minute closes here. DXY is still moving down. ES moving up. Okay, looking bullish so far. Volume imbalance here on the 5-minute. I'm gonna take a trade. I'm gonna take a long off here. I'm just gonna place my stop below this. See if it wants to go higher or if that's gonna fail. Okay, now I'm gonna close my trade. So that's a 1,500 loss. Very, very choppy. It's this immediate rebalance here. This is looking like it's gonna go down. I'm gonna go short. It's gonna be my last attempt. If it doesn't give me what I want, I'm just gonna move to the sidelines. This thing needs to start moving in my favor now. I'm gonna reduce the risk. Takes out this most recent low. I'm gonna reduce the risk up by half just to make some of that profit back. Make some of that initial loss. Okay, close half here. So I just made half of that loss back. I'm gonna move my stop to this level here, reduce my risk. So if we dip below that initial sell side liquidity rate, then we're good to go. I'm gonna close another portion if it dips below these lows, just for money management purposes. I don't like that reaction. Looks like we're stuck in this tight range, so yeah. See. Very aggressive chop right now, so now that I've seen it do this, I'm gonna be very, very nimble. Gonna change my approach now. I'm just gonna look to take small portions. So with what I've seen so far today, I'm gonna opt to wait for the PM session. This isn't a market which I'm interested in at all. We got FOMC at 12 p.m. minus 1,500 for the day. So I'm not gonna make it any worse. I'm gonna wait for something clearer later in the day. So nothing exciting. One could play devil's advocate. So So we need to ask ourselves, where is the most vulnerable liquidity right now? For me, it's that downside. See if it wants this volume imbalance. If it feels it, I'm going to trigger one more short. See if it gives it to me. Okay. Last and final short. See what it wants to do now. Reaction of consequent encroachment of this 15-minute fair value gap. And I'm going to try and full pull it to the downside. Justin, we saying, shall I full pull this beat or should I take partials? All right, so take off 5 there. I want to see animation now to the downside. I want to see aggressiveness. I don't want to see this slow price action. To be fair, I don't even want to see this pull back. I'm gonna move my stop just there, just above that volume imbalance. I don't want to see it mess around now. Every new low that forms, I'm gonna wind down my position. So as soon as it forms a new low, I'm gonna take another contract off, and every new low, I'm gonna take off a position on every new low. Okay, winding down the position, every new low. See if it forms another low. I'll take another contract off. Yo, Justin, bro, don't give me evil eye, bro. Move my stop to break even now that you said that, bro. You trying, what you trying to do, bro? So I'll reduce my position just in case he wants to go for that stop. Come back Tuesday. Yeah, most likely. It's gonna be the last trade of the day. Most likely. If we get a new low here, bro, I'm going to take another contract off and I'm gonna be conservative and just move my TP there. Only down 200 now for the day. If it takes my stop, then I'll be down 100 and a bit. See what this 1 minute candle does. If it doesn't push lower now, then I'll just close it. 1810. I want to see that move lower now. I don't want to see this stall here. I'm going to move my stop just above this fair value gap. So if it takes my stop, then I'm literally back to break even on the day. If it goes down, I'll be in profit. Okay. Back to break even, and we're done. That's it. Yeah, same, bro. I'm literally just gonna switch this off. Done for now. Bro, in a bit. Peace.